Pat, rumor has it it's Friday.
That's what I heard. That's what I heard. That's Some people thought it was Thursday, but it's Friday.
Yeah, what the hell happened to Thursday?
What happened to this week?
Yeah, this week just flew by. So
Yeah. Welcome
doing
everybody.
yes, our millions and millions of viewers. Let's see how many do we have on here right now. Well, it's not a million. So that's we're getting there.
It's
We
between one
have
and a million. Yep.
one in a million. That's what it is. So what we're gonna do, we're going to go over some quick inventory numbers, not only here, but some other markets. So I'm going to show you that quickly. I've got some not only Cromford data, but I have a new source that the government just came out with this week that I can't wait to share everybody. I put the link in the body below. So we're going to take a look at all this fun stuff and let's get this rocking and rolling. So today, 5,030 homes. That's about 300 more than last week. The interesting thing is when we look at the 7-day moving average, it's the same thing. It's now the Cromford data says the report says that sales are really, really backing off. But investor sales are up, and I've got a couple articles. I'm going to touch on that towards the end. But you can see that we had 3,860 new listings come up, and guess what? 3,803 got gobbled up. So as soon as they come on, they get gobbled up. But I get the comments all the time. Well, it's all these people from California coming over, and that's true, right? 19% of our buyers are from the Golden State, but we're not alone. So check this out: Albuquerque, January 22 has 626 listings. In December, they had 793, but they're down 47.5% compared to last year, and that's in Albuquerque.
Wow.
And you look at these numbers here in this column, comparing them to last year. I mean, look at Denver, down 48.9%. Now, Austin, Texas is only down 1.3, but even Boston is down 41.4%. Now, people from California are not going to Boston.
No.
So I think so. Tyler, fair price gets bought, and the outrageous just sit. You're absolutely right. I mean, I think I told the story last week about that house that was listed for $489, and it sat there. Nobody did a thing with it. They lowered it to $475, and people bid it up to $484. It's the craziest market. Las Vegas is down 32% compared to last year. So everybody overall is down 28.3%. So this inventory issue is continuing to go and hit us absolutely everywhere. So, there isn't a city that's immune to it. So, Pat, what's going on in the lending world this week?
Well, every lender went out of business except me last week.
Okay. I got the memo.
Yeah. So send all your deals my way. No, rates. Rates. Obviously, you can see. Let's see here. We saw the run up, and now they've kind of retreated the last couple of days. I mean, they ran up. They touched. You can see the support level or the ceiling. They call it now. This is a ceiling versus this is support. So I mean, I think this is just going to be that type of year. As I told you the last couple of weeks now, I'm starting to realize. I mean, I'm seeing on the lending side, I'm seeing a lot of, like you said, lenders that were in refinances. Those are pretty much, obviously, a lot of them have gone away. What I'm seeing is a lot of LOs starting to scramble as far as what, you could just see it in the Facebook posts, like, oh my God, what should I do? And rates are up. And the problem is that, it's the, no offense, but it's usually the newer LO that's gotten the business to last, within the last 2-3 years that were.
Yeah. And they thought rates would stay low forever, huh?
Yeah. And, they were quoting 2.5, 2.75. Now rates are 4, 4.125, 4.25. And obviously in some cases with some mortgage banks, I think I'd be a betting man to say some of these, retail mortgage banks are probably quoting mid to high 4s. in terms of, because what's happening now, I know this doesn't really have anything to do with if the viewer's interested or not, but just on our end, there's going to be shakeout because a lot of these lenders were, obviously riding the rate refi train. And the mortgage banks, the strictly mortgage banks, that's all they do is mortgage banking. They're going to see their margins compress. And they made a lot of money on FHA and VA, and they made money on conventional, but now the refis are gone. They're going to have to raise their rates even further to kind of keep their pot of money going. So, that's going to be tough. There's going to be layoffs. I'm starting to see it already. The last week and a half, 2 weeks, I've seen news, companies kind of shifting, there's going to be a downward shift in the, mortgage employment. No doubt about it.
Gonna have to get mean and lean.
Yeah. Yeah. So the rate, rates are, once again, going, that chart you saw, I mean, I think we're going to see a lot of backing and filling this year. I mean, it's going to go up, kind of, and then, I think, we're going to see this, muddle around here, then maybe go up a little bit here. I'm just projecting. I mean, obviously with the news that we've got, their feds, really right now, I mean, you're looking at, the markets are really on edge as far as how many times the feds will raise rates. And the thing of it is, obviously, the question is, do they overcook it with too many rate hikes too? So like I said, I think it's gonna be like 2018. It's just gonna be a sloshy market.
I saw this headline this morning too. Would rates be going higher without the Ukraine situation?
Yeah, I mean, I think they probably would be. I mean, I'm sure the feds are going to raise it a couple of times and see if they can absorb it. And like you said, back in 2018, the feds overcooked the rates. They hiked four times in 2018, and then all of a sudden you had long-term rates slide down. So they started easing back into 2018. So like I said, I think this year is going to be like 2018. Rates creep up higher, in response to that, obviously hawkish Fed, and then the multiple rate hikes. So it's just going to be one of those. It's not going to be one of those fun markets where.
Well, then I think I told you the story where an agent called me and said, "Has your client locked in his rate?" This was Monday, and I said, "I don't know. That's between him and his lender." And she goes, "Well, he needs to lock his rate because if Russia invades Ukraine, rates are going to go through the roof." And I'm thinking to myself, I'm no economist, but if we end up with turmoil, won't there be a flight to safety?
Yeah, there's always a short-term flight to safety, so rates go down. Yeah.
Yeah. I mean, I certainly don't want a war to break out so that rates go down, but that's what would happen. I don't think that rates would go shooting up because there's a conflict out there. So, but I smiled and nodded and said, "Yeah, okay. I really appreciate that."
He said,
we got Derek. I saw a report suggesting renters are not paying rent at historic levels. What's the impact to the Phoenix market? And then he also says, "Do you think it's possible to hit 5%?"
Yeah, it's a different question. Yeah, different person, but yeah, I mean, rates have already gone from. I mean, I've seen them go from like low 3.1 now to about 3.99 to 4.1. So they've gone up a point, basically 30% in the last month and a half. Yeah, 5 could be definitely. We saw it in 2018 where they hit low 5s. So it's definitely that's gonna be a possible. Yeah, it's definitely possible.
It could happen.
Yeah.
And Derek, I've got some information I'll share with you that I just found today on that very question. So we'll have that coming up in just a second. So
yeah, but I think rates will hit. I mean, yeah, rates are. I mean, right now they're at. I mean, for like I said, some lenders, I'm in the low 4s, 3.99, 4 and an eighth. Where I guarantee you, some of my competitors are 4.5 to 4 3/4 already.
So. Well, we're seeing a softening in purchases. Now, it's not showing up on my 7-day moving average, but according to Cromford data, they're seeing that sales are down about 22%, but it's being made up by investors. And, they're still keeping the market flying pretty high. And there is, we do get a thing called rent stats and market stats from the MLS by a guy named Tom Ruff, he's right up there with the Cromford people. And he's a pretty sharp guy. He does a lot of analysis. And he said, according to a new report from Redfin, Phoenix was named the most popular U.S. migration destination of 2021, followed by Dallas and Orlando. And what he said here is the Maricopa Association of Governments, didn't even know there was such a thing. So just another acronym for us to memorize, MAG,
Mm-hmm.
recently launched their Housing Data Explorer, which provides data tabs on home sales, apartment rents, evictions,
Hmm.
cost burden households, and distressed properties. So this is right up Derek's wheelhouse here. They just came out with it, and I put the link in the body below, and so anybody can access it. And it looks like this. It shows you price trends, right? Median price, and this is an interesting chart. In the green, that's how many homes are priced, between 200,000 and 300,000. So you can see above 500,000, that that area is growing, right? The others are
Mm-hmm.
shrinking. So it's kind of like a well, duh moment, but that's a, and it's got a median price comparison in by city down here.
Oh,
But then these other tabs are interesting. Apartment rent.
oh,
Okay. So it's showing um, under 500, 500 to 1,000 is 12% of the market. And then you got 34, then you got 39, and then you've got 15% above 2,000. You can see how quickly that's grown from
yeah.
Q4 2020 to Q4 2021.
Wow.
And here's the fun part: evictions.
Huh.
Okay. um, is everybody getting booted out? There's a lot of evictions going on because some people really took advantage of the rent moratorium, and
Yeah.
the reason they're getting evicted is because they didn't apply for the government assistance. It was there,
Huh.
and they didn't apply for it, and they were just telling the landlords, I can't get booted out, and the landlords couldn't get them out. So when it came time where the moratorium ended, landlords were just booting them, saying, you didn't help me, I'm not helping you. So,
Mm-hmm.
so you can see that in Maricopa County, we had 5,073, but that's kind of normal, right?
Mm-hmm.
I mean, if you've ever been to court downtown, and it's they, it's amazing to see how many people are having rent
Wow.
problems. Cost burden households, and I think you have some charts that might kind of show affordability too. We want to pull up. You can
Yeah.
tee that one up. Households paying 30% of income on housing expenses, 31%, and these are households paying 50% of income, which is 14%. So, um, but it's, and then distressed properties. So that there just ain't a whole lot going on there, folks. I mean, there's nothing. There's so much equity, people are not giving them back. But
No.
this is a great
Huh.
this is a great thing. It's got a newsroom, press releases, videos, publications. Brand new Maricopa Association of Governments.
See, while you're
So
surfing that site,
that's
I'm
a,
on match.com. So
all right.
so
Okay. Yeah. Let me know how that goes. So I got good.
uh,
Get rid of that trash. This isn't California.
yeah, no kidding.
So it's I understand the plight when somebody loses a job and they can't pay their rent, but there was more than enough information out there for these people to click on the tab, fill out their information along with their landlord, and get rental assistance and not stiff the landlord. And some people just took the easy route, thinking, well, the government
Yeah.
says I don't have to pay, so I'm not going to pay. And that's, come on, be a good steward, for crying out loud.
Yeah.
Now there's
That's
another. Have you found that other chart there, Pat?
it's on Meta. I thought it was,
Yeah, the
did you
one that you were showing on affordability.
oh yeah, great. Now, I thought, didn't you have it all lined up or no? Was it me?
Well, you added this one, so
Oh
you got to
shoot.
remove that screen and put the other one
Okay.
up.
Let me, all right.
Um, while you're doing that, there's something going on that's that I don't like, and investment firms take aim at short-term rentals. We're already full of Airbnbs, almost 4,000 of them in Scottsdale alone, and even the Cromford report, and not like Cromford report, but um, the Tom Ruff article, he goes on to say that, well, our pricing for January is 430,000. The actual number is 435. He's projecting it's going to be 440. And but he went on to say how many homes are Airbnbs, and now you got these firms that want to do it. So we're already getting hit with these hedge funds coming in and buying these homes and making them long-term rentals. Now they got their goggles on short-term rentals, Airbnbs, and they're already a problem.
Yeah.
And so they're going to come in and start gobbling up stuff. I just think that's the wrong way to go right now. But
I would, what, just, I mean, this is just to kind of throwing this out. The HOAs, I mean, I don't have an HOA where I live. I mean, do they restrict? I mean, can they, I mean, it sounds like a dumb question come from me. I don't know.
no,
I'm
it's
obviously
not. Here's the actual rules. The HOAs in your neighborhood. In fact, there's a lot of legislation being written right now. They're trying, because in 2016, our governor said you can't regulate Airbnbs. But then he came back and said, well, we're going to have to tweak it, because areas like Arcadia, big, beautiful homes, they'd have 15 cars out in the street
Mhm.
and 40 people partying in the house.
Yeah.
And Sedona's got over 1,100 Airbnbs, and they're struggling. So they're going to let some of the cities put in some layers of regulation, but HOAs have to have it in the CCNRs. So in other words, they just can't go in and vote at a board meeting and say, okay, now we can't allow you to have any short-term rentals. It has to be in the CCNRs. So it has to be rewritten. And, that doesn't happen overnight. So you're going to start seeing more of that, especially with condominiums.
Yeah.
And, but there are some condominium complexes in downtown Scottsdale where the entire complex is short-term rentals.
Yeah.
And I mean, the whole thing. And so uh, that inventory is just being removed from people like, for people like you and me.
Yeah.
And now if you get these, investment firms coming in, they'll be buying up blocks at a time.
That's kind of ridiculous. I mean, it just,
And so
it's,
I'm not a fan of that. I'm a fan of the free market, but I
yeah.
think there should not, when you end up with hedge funds
I
pooling their
mean,
money together and coming in, disrupting the market as much as they're doing here in Arizona. It's hurting a lot of people. And that's why you see average sales right now down double digit for mom and pop and kids wanting to buy a house. But now you're saying homes, this is homes more affordable today than in 2007.
yeah, with the interest rate, this is some charts I pulled up off of current, keeping current matters, matters current. But yeah, I mean, it's kind of hard to believe, but I mean, they say based on, let's see, where's my, based on today's numbers, 25.8 versus 28, but back in the normal, and then 34 back in '07 because rates were higher. Just a couple of
But
charts
I,
that,
but I always question that 2007 number. And here's why, Pat, because these show that assuming you're paying the prevailing rate, which was 7%, but we know nobody was, they were all paying the teaser rate.
yeah, yeah,
So I'll bet the real number of what they were actually paying was down to about 17, 18%,
yeah, you're probably right. I mean,
half of that.
well, let's see, back in '07, I mean, um, yeah, probably about right. About 5.5, because typically they start at 5, and then the 2 years it would bump up to 7.5 or 8. You're right.
Well, some
Um,
people had
well,
1% adjusting arms too. So,
yeah, exactly, exactly. Yeah, there's a lot of those as far as the negative amortization loans. Here's another. I mean, obviously, I'm just kind of, these are a couple of charts to say, hey, are we going to see a crash? I mean, you got lending. This is kind of what I beef about. Most of the time is lending standards are definitely tighter since the crash. This is a volume of loans in billions with credit scores below 620. I mean, like I said, we were handing out five. I was doing loans for people with credit scores of 540, 550. Um, they're still going out the door, but you get a lower credit score, and they basically put an X-ray, MRI, you know, um, over your documents. So, I mean, they CAT scan your documents. I mean, make sure everything's right. You got 300 billion, 350 billion back in 303, 406. You see how obviously they did tighten up in terms of who got, if you're 620, below 620. So that's been riding that way for like the last 13 years. And then you've got, what we've always talked about now, we kind of switched our tune after the last year or so since the pandemic, but You had, 4 years of housing crash. You had number of consumers with new foreclosures. You had 1.1, 1.7, 2 million, and 1.8 million. And now you got 279, 277, 129, and 38. There was an article, I don't know if you saw that or not. They're saying foreclosures. I saw one article this morning saying foreclosures are up 65%. It's just like, once again, I mean, I think anybody in this market right now,
65% of what?
yeah,
It's
we'd walk.
83 here in Arizona.
Yeah, I mean, I think there was like there I saw a number that there was like 15, 11 to 15,000 foreclosures. I mean, that this market would be would welcome that type of, some type of foreclosure supply, honestly. I mean, I hate to say it because one's negative situations the benefit to other, but I mean, you see this and I see this chart and it's just like, we're just not there. And I mean, yeah, something down the road, certainly but for right now, if somebody's, I think if you're looking long term, it's going to bode well. And then the supply of homes, this chart says is nothing like last time. At 9.6, this is a month supply, 9.6, 9.4, 7.3. Now, last 4 years, it's been 3, 7, 3, 199 or 19 and 18. 1.8. That's 1.8 months of supply. So
yeah, we were sitting at just less than a month on supply, and in 2006 we had what was it? Well, days of supply. I think we had 428. So to answer the question here from RPG, I feel like a crash is out of the question, barring some unforeseen calamity. Another 2008 is not on the table. It can't be on the table until we see inventory explode like it did in 2006.
Yeah, those 4
And
charts I just showed you, just kind of, I mean, it is what it is. I mean, people could say, "Oh, we're going for crash," but you have to look at perception versus reality. Perception, our perception, yeah, we love to see, I'm sure some people are like, "Oh, I want to see a crash so I can buy a house," but I beg to differ that if we did see a crash, how many of those people that were dying to buy a house?
how many of them are going to have a job?
They want to have a job, or the thing of it is, I mean, a lot of those times, when I was a stockbroker, I mean, people say, I want to buy, to buy low and sell high. Quite frankly, it takes a lot of balls. And when it's to buy low, you got to buy when there's blood on the streets. And back in 09, 10, 11, people were not jumping into the real estate market. That was when the blood was on the streets. So I just don't.
I have a classic example for you. There's a home in the Melrose district that we've got under contract right now for over $500,000. They purchased that in 2010 for $63,000. Now they've remodeled it. They probably put 150 into it, so they're into it for 210. I mean, but nobody else was clamoring to buy it back in 2010 when it was only 63,000. So Dan says moving to 55 plus community in the fall. Presently in Gilbert, wait to sell in late summer or sell now and pay rent several months until the house is ready. I don't see any numbers, Dan, that say that we're at the peak. A lot of the numbers that we're seeing, there is being a subtle change, but it's going to take, again, barring any unforeseen circumstances, what we're seeing in those numbers is that, it takes a couple of years for this to shake out.
Mm-hmm.
We're not going to just all of a sudden go from 5,000 listings to 105,000 listings. Or even if we get to 20,000 listings, you're still going to be able to sell your house because it's a balanced market at that point.
Yeah. I mean, you look at those charts, look at that chart back that put that chart back up. I mean, from 07 to, that's 07, 08, 09. It took 2 years to go up, I mean, it takes things to develop in the real estate market. So yeah, I mean, it'd be fine.
Yeah, I think I'm looking over here trying to find my chart that showed. Yeah, good. Here it is. So, I mean, this is what says it all. So, Jeremy's got a comment. Reventure Consulting is Peter Schiff of real estate. Watch one rental at Times channel with Michael Zuber for a more balanced. Yeah, a Reventure. He's a smart guy, but I'm sorry, he's a sensationalist, and it drives me kind of nuts. So if you go to 2006, these are active listings, right? And here
Mhm.
we are today with 587. What is that? Active listings excluding UPC. 587. That doesn't make sense. Well, let's just look at it in comparison here. 2000. Look at that. So,
Yeah.
that's just showing Phoenix. Okay.
Phoenix.
So it's not showing everything. Well, let's just stick with Phoenix. So,
Yeah.
in comparison, so we only have 545, 587 homes right now, and 615 it says in 2022. I'm jumping all over the map, but it's that's what we have now. And back in 2006, we had 7,426. 2007, look at that, 10 grand.
Yeah.
So this is before the crash, folks. This is 2007, before the crash. So we have 600 homes now, and there were 10,000 homes, and it hadn't crashed yet. When did it crash? 2008. Now look
Yeah.
how many homes you had. So right here in 2008, there was 11,000 homes, and if I get rid of those, let's see what was going on in 2010. There was still 7,000 7,300 homes. That's when that guy bought that home for $63,000. So
Mhm.
um, I think it's um, um, a number to follow, and so, I mean nothing's going to happen until inventory goes up. So at what price point do you need a jumbo loan in Arizona?
It's the new number is 647,200.
How many cents?
No sense.
Because they usually do that.
Yeah, well, they do the 6,000. They'll do 604,241. Some stupid number, like I don't know who they put why don't they just round it up? Six hundred forty
Yeah, I mean,
seven
I
thousand
picture
or
people sitting in a big long table and they're trying. As I've been in meetings like this,
I mean, I've
no,
got
not
this.
641, 642.
Yeah, I mean,
It's
FHA back in 2018, FHA was 294,515. Why don't they just round it down to 500? I mean, it just and
yeah.
then it went up to 314,827. It's obviously it's a mathematical, equation that they use, but just round up or round down. Jesus. I mean,
I was in a meeting in upstate New York when I worked for the baking company out there, Fryhoffers, for those of you that know that area in Albany, and there was a debate, with the route drivers. They wanted to wear shorts, you know,
mhm.
and back then everybody was wearing shorts. We were wearing shorts out here. They're wearing them in California, and the managers were just very controlling, and they just thought, we can't have them going into grocery stores wearing shorts, even though everybody else delivering water and milk and everything was wearing shorts. So then after they relented that they would go ahead and allow them to do that. I'm just sitting back and I'm just listening. And then this one guy goes, well, we'll allow them to wear shorts but not after Labor Day. And they can wear them starting Memorial Day weekend to Labor Day. And I said, look, if a guy wants to wear shorts in January when it's 18 below,
That more shirts.
let
Yeah.
him.
Yeah.
Let him. I said, what am I missing here? I said, it doesn't cost us a dime, and it makes them comfortable, and it makes them happy. Why are you saying no? I
Yeah.
was just incredulous. It was it was crazy. Were prices still going up in 2000, 2008? No, they weren't. They were coming down because
No,
the inventory was.
I mean, honestly,
Well,
I don't have any.
2007.
No, I'll be honest. I'll kind of disagree with you. I mean, they were still going up, but at a decreasing rate.
Well, that's true.
I mean,
2008. I mean, they fell off
I
the
would say
map. But
2000, beginning of 2007, it started cracking. And I mean, it broke about the first quarter 2007. Yeah, 2008 was basically that was kind of it was just the avalanche. It was
Well,
because I remember.
2006, I remember in 2006, people were going down and buying lots in Maricopa,
Yeah,
just, a lot,
yeah.
and it's showing up at the closing table and signing it over to another. They buy it and sell it. They make 13 grand.
Yeah, which is the assignment. The assignment stuff is, I had people say, "Oh, I'm going to buy this house," but I'm going to, somebody else. I get a contract saying no buyer. Like, well, I'm going to sign. I'm like, I can't do an assignment, not on my end. So there was a lot of jiggy stuff going on, but it was basically cracking in the February, March of 2007. I mean, it was going up. It was going like this, but then it just started turning. It started turning. You could see it like, okay, I called 3 people and I said, something's going on. I think I told this story about, and in 2007, NAR, the National Realtor, Larry Yoon, my buddy said, oh, Larry Yoon said, we're going to be out of this in a year. I looked at him. I said, it's going to take us at least 5 years to get out of this thing. He goes, you're full of crap, blah, blah, blah. And he called me back about a year later. He goes, I think you're right.
Well, there is a book that's out that came out a long time ago that was called This Time is Different, two Harvard economists. And
Yeah.
they added a supplemental section to the book talking about the crash. And I remember in that book, they said it was going to take until 2017 for that to turn around. And they were right on the money. But their book was interesting. It just said, the economic fundamentals over 700 years that they studied said, if the Fed pumps, if there's loose monetary policy, then the stock market's going to go up and real estate goes up and so don't fight it.
Yeah.
Don't fight the Fed. Yeah. And it happened, but everybody always go, oh, well, this time it's different because we're taking all these loans, we're putting them into a little tiny bundle, and then we're selling them, and we're spreading the risk out to far more people. That's why when the whole thing crashed, nobody knew who held the note.
No, they would take about a bundle of a $10 billion bundle of MBS, and it was a known fact that they would take, I don't know the exact numbers, but they would, say if there was, 1,000 loans in this batch, every lender would throw in 10 or 15, 20, give or, I'm just making numbers for sake of numbers, but they would throw a bunch of, some subprime loans in there, kind of like, we're not going to give you all the goodies. We're going to throw in a couple of bad apples, but, so yeah,
here's what I was looking for. So this shows all the years. So here's 2007, 2006, monthly average sales price per square foot. So here's March 2006. We had a little dip, went up a little bit for just a few months in 2007.
The first quarter 2007. Yep.
May 2007 was when the wheels fell off the wagon.
Yep.
And that started happening, and then the financial institutions collapsed here in 2008. So there it is there now. Look how long we stayed there. We hit bottom on April 2009 and didn't start coming out until 2011.
Yep. So, August, I saw it. I just, from July, August, and September of 2011, I tell people it was the best time to buy. It was basically right there. Yep. So
are we going to have a spring buying season when there's no inventory?
Yeah, I don't know. I tell you, this is
3,800 March. We usually are rocking pretty hard, but and no spring training yet. The pitchers and catchers are supposed to show up this week, and that didn't happen. So
that's going to hurt the Airbnb business, but no doubt about that. Thank you, RPG. Appreciate the comment. Thank you, and thanks, Dan, for chiming in. All these people it's very nice to get comments. So,
do you see interest only loans or any kind of different packages on loans? I know there's a little bit of chatter on 40-year mortgages.
I mean, I'm getting some chatter. I'm getting some lenders that are coming out with interest only. ARMs, 7-1 ARMs, interest only. I did see there is one or two. There's a lender out there doing a 40-year loan. It does help somewhat, but but that does not help. I mean, you can have all the loan programs, but if you're not getting the bid or the offer, because you're getting, $20,000, $30,000 outbid, I could have that loan program, but it doesn't matter if you don't get the house.
Yeah, it's still, despite the fact that we're down like double digit, the bidding wars are not. They're full speed ahead. Now, something to consider. You mentioned Airbnbs and spring training. Super Bowl's next year here.
Oh yeah.
And you remember in 2015, people were leaving their houses, going somewhere else, and then renting their house for $5,000 for the week.
Yep.
That was in 2015. So if you have an Airbnb anywhere in the valley, crank it up. And if you happen to have a house where you can leave, take your valuables out and rent it out for a week, the Super Bowl, that's a lucrative time.
Yeah.
It's absolutely nuts. People will pay anything. Yep. And I remember watching the helicopters go over my house from the stadium to Scottsdale Air Park. So if you're a celebrity watcher, just go pull up a chair at the Scottsdale Air Park out there
Oh
and
yeah.
just watch all these people coming and going and getting in their jets. So
True.
it's a fun time when the Super Bowl's here. So so we shall continue to watch these inventory numbers. It's just a slow death march.
Yeah. I mean,
Um,
yeah, I think it's gonna be a death march. I mean, on the mortgage side, I mean, like you said, I'm starting to see. It's kind of funny how you see. You do. I do. Reading. I watch stuff. I listen. I talk to people, and it's kind of funny how you're gonna. On my side, you're gonna see a lot of new loan officers are freaking out. Like what should I do? Because like you said, as I said earlier in the show, they got in when rates were 2.5 to 2.75, 2.99. Now they're like, oh my God, 4.5. What am I gonna do? It's just
yeah, yeah. Hey, and we're going to be putting out a video, you and I, where we're going to talk about the best way to look for a rate.
yeah.
And so I want people to understand the process that will net you the best results. And I can tell you, it's not going online and finding a rate and clicking there and saying, there we go. We went through an
Well, that
online lender. So I want to go into detail with you
okay.
on the best way to do that, and so that people know, and we'll
Well,
and we'll upload that so that people can see it, or we can do it next Friday live. No, next Friday I'm not going to be here,
okay.
so
All right. Now we'll
going to
do it.
be
Maybe we can upload it. I mean,
yeah.
this is one thing to keep in mind is that I think we go into this next couple months. This is me kind of personally speaking. I can kind of see happening. There's loan officers that got in this business the last couple of years. People that shop for a rate. You want to make sure that you're getting a solid. Whether it's obviously I'd love to people call me, but if whoever they call, make sure that they get quoted. They might not be able to quote a rate when we'll go into this, but there's gonna be a lot. I mean, I guess the point is there's gonna be a lot of desperate LOs playing games. Like, oh, I want your business here. I can get you this rate, or they're just kind of desperate. They're running scared. So, you don't want to make sure you're not getting played games by where they're buying it. Oh, I get you 2.75. Beware if it's too good to be true. It probably is too good to be true. You're probably paying about $10,000 to $12,000 for points.
It's going to cost you about 15 grand.
Yep.
I was locked in at 4.125. APR was 4.385. How does that compare with the market right now?
Oh, that's right there. Yep. It's pretty much right there. Yep. 4.125, 4.25, give or take. Yeah, it's pretty much right there. Rincon. So
well, cool. Well, look, have a fabulous weekend now that we know it's Friday, or I know it's Friday. So
yeah. So
and take on the day, huh?
Yep.
See you to our millions and millions of viewers. Thanks for watching.
Yes. Thank you, people. Take care.